Welcome, ladies and gentlemen, to the casino that is the stock market. My name is Shades. If it's your first time here, be sure to subscribe and give the video a like. It really helps the channel grow. Now let's jump into the video. Welcome back to another Aitx video here. Steve Reinhardt, I did tweet at him and asked him a question with regards to the dilution and when is that going to decrease. Let's see if I can find it here real quick. Where is he? Where are you? There you are. I was like, where's this guy? So he did respond, and I am going to go over a bunch of numbers right now. But first off, Shades, your headline here and emergency video are mildly misleading. What they imply is misrepresentative because there is not time attached, so it implies something happened in a short period of time. Well, YouTube got a clickbait. That's just how it is, unfortunately. If I didn't have to clickbait, then I wouldn't, but that is the game. That is so. Yeah, emergency upload. I mean, even the big channels do it. So I got to do it too. That's just, unfortunately, the name of the game. Grossly incorrect, as you know. Yes, that is absolutely incorrect. There is no time attached. You can absolutely wait 10, 20 years for the stock to finally stop diluting and buy back shares, give out dividends, etc., assuming that their revenue month rate grows to such exponential heights. Absolutely, I agree. There is no short period of time. So I agree with him. I'm not going to lie to you and tell you, oh, no, he's wrong, I'm right. No, I'm not one of those people. He's absolutely right now. What would be better is charting dilution against sales growth and maybe mentioning that dilution, which is one time, versus our deployments, which it's one time. Whoa. Which is one time. It is one time, but if you keep doing it over and over again, yes, it's still one time, and then next week it's still one time, and the week after it's still one time, and then the month after it's still one time. But if you continue these one times over and over again, they're one time, but if it doesn't stop, you're doing it many times. That's what it is. But if it doesn't stop, it's gonna continue to suppress the share price. That's what that means. Versus our deployments. Okay, now this is different. If we're comparing the RMR based on device rentals. I keep saying sales because I'm used to saying sales. Device rentals. Then over time, we should see not only a huge increase in device rentals, which should mean a higher RMR, which should eventually lead to the point where you don't have to dilute very much. Because either stock does not dilute. The only time they dilute is when they are making an acquisition. That's when they do their biggest dilution. Other than that, now that's good dilution. But other than that, they don't really dilute 333 million every month. That's not a thing. Not even close. That's why they have the share structure that they have. Much better one, quite frankly. But so kind of like pay once and get paid for a long time in return. Well, what's the attrition rate? Less than 10%, if I recall. So that's true. What he's saying is true. So kind of, okay. One of the key reasons why our share sales are far from bad. Your share sales are bad. If we look at it in a vacuum, it is bad. Like almost half a billion in 1 month. That is pretty bad. There's no which way around it. The math should be working out incredibly well. If you're comparing it to the potential that this company has and getting those device rentals up by a ton, which would mean you get to the point where your net working capital is negative, but among other things, and hopefully you have way more assets than liabilities at that point as well, because at that point you would have paid off everything and you'd be trading clean. Secondly, the dilution is already started trending downwards. Well, he probably knows the numbers. I don't. We'll have to wait until the next 10K and then the following 10Q to see if that's true, because we're going to compare year over year and see if it's true that it's trending downward. So he better not be lying here, because he will get caught red-handed. I will check that 10Q and the next 10Q and the next 10K and I will do the math. You better believe that. So that's a bold statement there. Secondly, the dilution has already started trending downwards. We'll see. If we see a downward trend, then I'm going to tell you, you know what, he was right. He probably knows something that I didn't. I mean, he's the CEO. So for him to make this bold statement, that's going to be interesting in the future when we double check that. Again, as you are purporting to follow the company, I'd expect you to know this. I encourage you to use your voice responsibly, and this tweet and the headline on your video lends itself to sensationalism. All right, that's interesting. Interesting response. So what I decided was, let me look at the sales or the total revenue here, year over year, 2020 to 2021. There was a huge, you can see right here. Let's see, 2020 to 2021, there was a percent change of 300%. And then the following year, there was a percent change of negative 7.96 for 2022. 2023, there was a percent change of 67%, which was an increase of 895K in dollar value. And then from there, the question becomes, what's 2024 going to look like? If they're predicting that full year 2025 is going to be 10 million revenue run rate, then that's a massive increase. That's what that means, because that means we're going to see this number go from 2.23. The above number is going to be like 10 million, which would be a massive, massive jump. That would be a massive jump. Massive. 10 million? That's massive. That's almost 500%. Not quite, but about. That's quite the growth. So if we do the math here, and let's just assume over the course of the next couple of years, they continue to grow, not at a 500% change in terms of sales, net revenue, whatever you want to call it. Let's assume a low number. Let's just assume 50%. That's a good number, 50%. So if 10 million is what's next, let's do a cool transition here. Boom, look at that transition. Well, I lied to you guys. We got to transition back because the calculator app is over here. Okay, there it is. So if we assume a 50% is it's just a number I'm throwing out there. It's a low number, especially for an AI stock. If you've been keeping track of SoundHound AI, Serve stock, Nvidia stock, Palantir stock, their growth has been incredible, especially their revenues. They've been growing quite a bit by hundreds of percentages. So 50% for an AI stock, we're assuming a very low number. So if 10 million is next here, then assuming they grow another 50% the following year, which would be what? FY 2026? Correct me if I'm wrong. Then, wait, why did I just... There we go. I was like, wait, what am I doing? So that's another... I didn't even have to do the math for that, but I'm just showing you guys. We know that's going to be 15 million. That's 15 million for FY 2026, assuming a 50% growth rate. And then we just do that again, and we add what, 7.5? So let's just add the 7.5 here. Oops, not 75. Okay, it would be 22, 55, and a bunch of zeros. There we go. So that's what you would get for FY 2026. 22, 550. That's not bad. I mean, we're almost at that point, at least by 2026. Did I say 2026? I think I meant 2027. By 2027, we will have 22,550,000 in revenue every year. And then assuming another 50% increase, it just goes up from there, right? Again, this is assuming that they only grow at a 50%. They grow their sales only by 50% every year, which is, again, they're very much, as you can see over here, they're very much capable of much more. 67%, 300%. They're capable of these, and we know we're going to get a huge jump here from 2 to 10 million. So they're very much capable of much more. This is lowballing it. So I would say, just based on that 50% arbitrary percentage that I'm using, we should see, and maybe I'm wrong, correct me if I'm wrong on my math here, but we should see about 50 million by 2029. That's what it comes out to, at least, because I just did the math in my head. It should come out to 29 by 2030. Let's just round it up. By 2030, we should have about 50 million in revenue, assuming they absolutely grow 50% every single year from now on. But take into account that every AI stock that I talk about on this channel, they all grow at like 130%. I think SoundHound has like 150 million in total. 150 million is a lot. They expect 150 million next year for 2025. Originally, they were expecting 100 million. So there was a 50% jump in their full year, in their revised full year revenue, sales expectations. I think that's the word I'm looking for. Keep confusing revenue and sales. They're the same thing. I just usually don't say sales. I say revenue. Anyways, if their sales continue the way that they are, I think we'll see much more than that. But my prediction here, based on that 50% number, by 2030, we should have about 50 million in yearly revenue. That is a lot. That means by 2030, we're really thinking big picture, and we're assuming the worst possible percentage growth. Let's go over here. So 50 million, that's 50 million. Let me look at their pre-tax income is 20 million alone. What's killing them right now? Their operating expenses, cost of goods sold is 1.99. That's pretty high. I mean, that's pretty high. I hope their cost of goods sold doesn't go up with their revenue. Because let's look at that's interesting. Let me look at their cost of goods sold. Their cost of goods sold. Yeah, I hope their cost of goods sold doesn't continue to rise with their revenues. It's gonna obviously it costs money to make money, but I hope it's not as big as this. I mean, this is 2 million and this is 2.23 million in total revenue. Their cost of goods sold is 2 million. That's a pretty high total revenue to cost of goods sold ratio right there. Ideally, I hope they find a way to cut down on that. Cost of goods sold is pretty high. Operating expense is not a big deal, because if your revenue is going to be 50 million by 2030, then it doesn't matter. That the operating, it doesn't matter. But if we can, this sucks. We'll see what happens. But 50 million, that's not bad. And dilution should stop by then. The only reason dilution would continue to happen if they have, by 2030, if they have that 50 million revenue every year, that if dilution continues to happen, that would mean that their cost of goods sold and their operating expenses are so much so, they've increased so much with their revenue, which is expected anyways, that they still can't afford to stay afloat even with increasing revenues. Which is why I always use the hot dog reference. You can't have a hot dog stand that sells hot dogs for $1 and it costs you 95 cents or 90 cents. It costs you 90%. Your cost of goods sold is 90% of your revenue. Like, you can't have that, because that once you factor in operating expenses, you're just never going to be profitable, and you're always going to be borrowing money because you can't afford to stay afloat on your net revenue alone because your cost of goods sold is so ridiculous. So that's the example. I'm sure some of you have heard this hot dog example before. So that's kind of the only concern here, is I would hope that their cost of goods sold doesn't exponentially increase with their revenue. Because if their cost of goods sold isn't 1-for-1 with their total revenue, but it's pretty close, like it's not that far off. So if you have 50 million up here in yearly revenue, but their cost of goods sold is 40 million, then you include the huge increase in operating expenses to be able to build all the devices to meet the demand that will be there in 2030. I mean, it's just, you're still going to be net negative. So that's just something to think about. Because it would have been foolish of me to say, hey, by 2030, I predict 50 million if they continue at 50% growth rate in terms of sales. But if we assume that their cost of goods sold isn't going to go up and that their taxes are absolutely going to go up as well. But if we assume that their operating expense is just going to stay flat, that would be delusional. It's going to increase as well over time. So we'll see what happens. But that is very interesting to take note, that even if their revenues grow, their cost of goods sold is so high that once you factor in the operating expenses, it just makes it difficult to be profitable. And they would just have to continue to borrow money. They would have to dilute still they would still have to dilute to some extent. Not as much. We would expect dilution by 2030 to be very little. Like, a couple million here and there. Maybe they make some acquisitions. They dilute quite a bit. But other than that, I would expect dilution to decrease by 2030. Like, we should start to see a downtrend in dilution starting next year. That's my prediction, at least. I could be wrong. If we're going to be getting 10 million full year 2025, then we should start seeing dilution start to come down. And Steve Reinhardt's, as I showed you in the tweet, he himself said, like, it's starting to trend downward. And their revenues are growing quite a bit if they predict 10 million by FY 2025. So this is just my opinion. I could be, way off here. But I assume, worst case scenario, they just grow by 50% every year. But we know that let's see if I can pull it up here. We know that, where's SoundHound? Is SoundHound? No, what is it? No, Palantir. Where's Palantir? Well, Palantir has government contracts. I could also show you NVIDIA. But, wait, what? Where is Palantir stock? I hate when I have to put my mic down. If we look at Palantir's growth rate, it's absolutely ridiculous. But I just want to compare so you guys don't think I'm making things up here with AI stocks absolutely booming. Where is revenue? There we go. That's what I was looking for. So you see the revenue just, let's see, I need the statements, income statement. Let's go to total revenue here. You'll see that they've been absolutely booming since 2019. Since 2019, from 742 million in total revenue to 1 billion, 1.5 billion, 1.9 billion, 2.23. Like, these guys are growing insane amounts. So that is the power of being an AI stock. And I would expect Aitx to do more than just 50% growth year over year. So that's why I assumed the lowest number possible. I could easily hype you up and say, guys, if we grow at 300% rate, if our sales go up 300% every year, oh my God, we're going to be at 1 billion by 2030. But I think I'd rather, I'm the kind of person that would rather lowball it. I'd rather under promise, and then if by 2030 we have over 50 billion, not 50 billion, over 50 million in revenues for Aitx, then I can look at you and tell us, see, I told you, it would be too easy to hit that number, in my opinion. I don't know what would have to happen for Aitx to not grow to 50 million. They have all the potential in the world. But in terms of dilution, yeah, we should see that start to trend downward. And we'll see in the next 10K and 8Q. Oh my God, maybe I need to get some sleep. 8Q, 10Q, and 10K. There we go. I was like, wait a minute, what? To 8Q? There's no 8Q. At least maybe in China there is, but anyways, I've been rambling for too long. Those are my thoughts. I just wanted to do some numbers. And let's see, Mr. Steve Reinhardt, it's time for you to show us that you weren't full of it, because he himself said dilution has already started to trend down. So, oh, by the way, if they grow to that much, 50 million by 2023, which again, a low number, they should be able to buy back shares at that point. Not a lot, maybe have a little program where they buy back a little bit of shares here and there. They should be able to. We'll be on NASDAQ by that point, so that might change things as well. But again, we're just talking about raw numbers here, and we're talking specifically about sales and how dilution should start coming down starting next year, in my opinion. But he said it's already starting to trend downward, so we'll see. We'll double check that in the next filings. In terms of the actual share price, let me do that transition again, because oh my God, transition, look at that. If we transition back to the chart, I mean, right, this thing's a buy, absolutely. If you're not accumulating down here, you're gonna miss out when it does run again, and eventually it will. But the stock, if dilution starts to come down, then combine that with increasing revenues, we should see this start to trend to the upside and actually hold a higher floor. because right now every time we pop, it seems like the company just wants to dilute to take advantage of the higher share prices, which eventually causes it to come down. So anyways, that's been way too long of a video. This is probably the only video I'm making today. I've been talking too much. That's it. I'll see you guys in the next one.